On the southern Mediterranean coast, nestled in the shadow of the rock's sheer limestone cliffs and its tangle of wild olive trees, the Gibraltar Stock Exchange (GSX) is quietly preparing for a corporate takeover that could have global consequences for the former naval garrison. Less than half a mile away, next to the blue waters of Gibraltar's mid-harbor marina, the peninsula's regulators are reviewing a proposal that would prompt blockchain firm Valerian to buy the exchange in the new year, meaning the British overseas territory could soon host the world's first integrated bourse, where conventional bonds can be traded alongside major cryptocurrencies such as Bitcoin and Dogecoin. It is a bold move for a territory of just 33,000 people, where the financial sector, which accounts for roughly a third of Gibraltar's £2.4 billion economy, is overseen by a regulator staffed by 82 employees. If all goes to plan, the enclave could become a global cryptocurrency hub. If the controls set by the small team of regulators fail, it risks reputational damage and ultimately diplomatic sanctions that could threaten its economy. While countries including China and the UK have either banned or openly warned against investments in crypto assets, Gibraltar has bucked the trend, having committed to formally regulating cryptocurrencies in an attempt to future-proof the territory's status as a financial hub. It comes as Gibraltar struggles to shake off a reputation as a global tax haven, with the government having sued a Spanish newspaper in an attempt to restore its global standing. Albert Isola, Gibraltar's Minister for Digital, Financial Services and Public Utilities, while Gibraltar was a tax haven 20 years ago, the territory has now overhauled its tax and information sharing policies. The introduction of crypto regulation is having a similar effect, rooting out bad actors and providing assurance to investors, he says. If you wanted to do naughty things in crypto, you wouldn't be in Gibraltar, because the firms are licensed and regulated, and they aren't anywhere else in the world, Isola says. Gibraltar's regulator has so far approved 14 cryptocurrency and blockchain firms for its licensing scheme, attracting the attention of ex-Sirius Minerals chairman Richard Holden, who chose Gibraltar for Valerian's crypto exchange project. Valerian, he says, is trying to harness the cryptocurrency sector, that is worth roughly $3.50 TN pound 2.6 TN, roughly the combined value of all companies listed on the London Stock Exchange. Holden is the chairman of Valerian, which is based in Gibraltar, and focuses on providing technology for linking mainstream, conventional currencies such as the pound and the dollar with crypto assets. It will be a major task to overhaul an exchange that is currently staffed by only 3 employees, and will require a change in Gibraltar's regulations to govern how crypto is going to be traded on the GSX. But Holden says his firm is leaning on technology, rather than people, to weed out any bad actors. He says running anti-money laundering checks on cryptocurrencies is not vastly different from running it on currency from any other source. And indeed, in some cases, because you can trace back through the blockchain and see exactly where that money has come from, it can actually be substantially easier than trying to find where a block of funds in a bank has come from. Other countries will be watching closely. Neil Williams, London-based deputy head of complex crime at Reed's Solicitors, says, if it's a success, you'd certainly think that other jurisdictions would look to follow, because it's an ever-increasing valuable commodity. However, experts have warned that Gibraltar could face sanctions by countries such as the US if its regulators end up giving legal approval to crypto firms that even inadvertently give a pass to money launderers, black market criminals or kleptocrats who prefer the anonymity of crypto assets. It comes amid concern at major global financial regulators, including the Bank of England, over the rapid development of crypto assets, and the potential consequences for consumer and investor protection, market integrity, money laundering and the financing of terror groups. It could enable or facilitate money laundering, sanctions evasion, terrorist financing, so everyone's wary of that as well, says Charlie Steele, a partner at forensic accounting firm and consultancy Forensic Risk Alliance and a former US Justice Department official. Regulators worldwide, almost all of them really, are approaching it from a position of deep skepticism, so it's a little outside that strain of thinking for a country to welcome them in to buy a stock exchange. A month before Valerian announced its bid for the GSX in October, the head of the US Securities and Exchange Commission, Gary Gensler, declared that as an asset class, crypto was more like the Wild West, rife with fraud, scams, and abuse in certain applications, raising further concerns over the possibility of criminal funds seeping into the mainstream financial system.